Hi, this is Randy Finney with the right side of the chart, and today is Monday, February 26, 2018. Wanted to take a quick look at the markets. We'll take a look at the near term as well as the intermediate and longer term outlook here. Uh, not a lot has changed. Starting out here with a QQQ 60-minute chart. Um, the story was the recent divergent lows, particularly in the index futures. We had divergent lows across the board, as well as the index tracking ETFs here, and we continue to rally. You can see QQQ is not too far from the recent highs now. We had this period of recent consolidation the last couple weeks. That's where I mentioned, you may want to step aside, book some profits on the index longs, recycle back in, especially on a breakout. So the story here is the update since last week is we have now broken out above those ranges. You can see here. Here, I'll box it in for you. This was the trading range over the last a week or so here, and looks like we had a fairly impulsive breakout. You might not be able to make out the volume bars here. I have them muted down quite a bit just to keep the chart clean, but there was a pretty nice volume expansion into the close on Friday. And as of this morning, across the boards at another monitor, I'm looking at futures. We're poised to gap up in the broad markets, the Nasdaq 100, S&P 500, still doing good. I'm looking at wheat futures. Various commodity futures are up, natural gas, a lot of things. So, the only thing I'm looking at, with a few exceptions right now, crude oil is poised to open slightly lower. So, things are still looking good. And again, not I don't see any reason to start to look to short this market again for the next leg down. But we may be getting there soon. A couple other things to note before I move on. I like the fact on the 60-minute time frames. You guys know I like to use the momentum indicators, usually the MACD and the PPO as well as the RSI. I look for divergences to call the intermediate term swings in the market, highs and lows. We had a divergent high up here at the top, negative divergence down below. We had a divergent low right here. And again, as a swing trader, this is my I would say without a doubt, one of my favorite or go-to time frames. And so far, so good. So we talked about all that in the past. This correction was priced into the charts. We got a pretty swift one because of the various factors mentioned in recent weeks, and we've had a pretty strong and healthy recovery so far. And the fact again that we have consolidated, as we got up here, I mentioned the market needs to take a little breather. You can't just head straight up forever. It's not healthy. You get extremely overbought, and then that leads to very sharp pullback. So consolidation during an uptrend or a downtrend for that matter is healthy price action, particularly once you see prices break above that range. So again, we're poised to gap up today. Nothing huge really, but you can see we closed right here at this resistance zone on Friday on QQQ. So I expect, well, right now we're going to see some more upside in the morning, but I think it'll continue. Here's SPY. This is the broad market. QQQ, like I often refer to jokingly, is a tech fund with an Amazon kicker. I say that because it's top heavy with technology stocks and lacking some key sectors in the economy, such as financials. Where S&P 500, when they refer to, or when I refer to the broad market, this is the index I'm really looking at. 500, give or take 500 companies, the largest in the U.S., with a nice representation of all the various, most of the various sectors in the U.S. economy. And story was the same there. Mentioned recently this period of consolidation, which was sort of flagging type action. If you look at it this way, here we'll erase that and show you what I'm talking about if you're new to my analysis. Here's that flagging type consolidations, and I mentioned that prices after a strong run or a strong drop for that matter, prices can consolidate or work off overbought conditions in one of two ways, or they can correct in one of two ways, either in time and or price. Here was a sharp price correction right here. The market was overheated, especially when you look at the daily time frame. So more zooming into the intraday charts here, looking at this sharp move up off the lows. This was our consolidation, and there's that breakout, like I mentioned on Friday. So uh, you just can't take that away. Now we do need to take out the previous highs, and let's see. So far in pre-market trading, the SPY hit a high of 276.10 this morning. This was my former second target, and we're trading at 275.94 right now. So we should gap just above there, but this was Friday's breakout. You can see here the trend indicators, the PPO. I mentioned a second ago on QQQ how I like to swing the divergent highs and lows. You can see, bullish divergence at the lows on SPY, like we had with QQQ in the futures, and um, and then we had the divergent high up here. Of course, this is where we had the sell signals on the market. But I also like to use that. It works well as a trend indicator when trading above or below the zero line. So what I've done here is highlighted that zero line, which is the dotted line below. There it is. Um, it often acts during an uptrend, prices will remain above, and during a downtrend, prices will remain below. So here you can see, and again, I always, if you're new to the site, I use the 9 EMA, not the PPO line. I use the signal line because that's the last of the two to cross. So it's sort of my filter, if you will. If you use the PPO line, you're going to have more whipsaw signals because it crosses first. And I found that by using the signal line, the white line, which is the last of the two to cross, does a much better job. And you can see all along from this point, even when you go to the left of the chart, it was above the zero line until right here. And of course, the trend was bullish. That's when you wanted to be long. We had the breakdowns that I highlighted on the 60-minute time frames here on all the major indexes at that point in time, and that coincided with a sell signal on the PPO as well right after we had that cross. So, and as you can see, we remained on a sell signal throughout that time until right here. And so, point being, back here is where we were testing long term and successfully held those long term trend lines. Um, and that's where I was looking for a reversal and we got it. This was just additional confirmation back then when the PPO crossed, that signal line crossed back above the zero line. And I wanted to make mention, just like QQQ, recently you can see that it has so far, successfully made a back test. And that's common as well. Once you get above that level will act as support during an uptrend and resistance during a downtrend. So everything looks good. I mean, you can't really, it's hard to knock the this move up. And again, my scenario I call still calls for more upside. This is the our broad market official trade ID on the site right now. T2 was hit, and we got that expected reaction, pullback and/or consolidation. And so now this is what I'm looking for this week. Power on through here, head on up, hit this third target. That will most likely remain the final target. Now, as always, um, do what you want. If you want to continue to trail stops up, there may be uh, weeks or months of gains ahead in this market, or we may fall shy of the new highs. Anything is possible. But in swing trading, particularly on this trade, to me, it's a get in, get out. There's a lot of other fish to fry elsewhere. Usually I focus on individual stocks and/or sector ETFs, commodities, things like that. So I just wanted to reiterate at this point in time that is the final target, and we'll have to watch. Anytime you have a pretty sharp move like this, a lot of eyes are on the previous reaction highs I just showed you a minute ago. QQQ is not far off those highs. Now let's just take a step back out to the more significant daily time frames. Um, these are more significant for the longer term, the bigger picture. And since either at the time of or before we even hit the lows, I had a scenario of a reversal here. Holding those long-term support levels, which held on a weekly basis, and I've drawn out this scenario, which I'm still leaning towards, and that is a thrust to go on to continue to take out the new highs and put in a nice divergent high on this daily time frame. And again, when trading, whether it's swing trading, investing, um, the same patterns work on just about any time frame you want to trade. On a 5-minute chart, you can see these divergent highs, divergent lows. Trade them for very quick trades. They might be day trades, only last 1 or 2 days. But when you go out to in the 60-minute chart, that was the case I made when a few weeks back when the markets went on a sell signal when they broke those trend lines. It also set us up for the reversal, confirmed the reversal. But if we get this is a much more powerful sell signal. Now I have these arrows drawn. I can't tell you exactly when we'll get there, nor can I say guarantee this will work out. But that is the scenario that I'm on watch for now. Um, I'll look for evidence, and if and when we do make new highs in the SPY on the daily chart here, I'll start to zoom down, look at the intraday charts, and see if we can set ourselves up for the nice for another swing trade on the downside, and quite possibly a more powerful and lasting drop than the one that we just had a few weeks back. So hard to say when that happens, but if it does play out, it'll almost certainly be here in 2018 and quite likely in the first half of 2018. So that's my continues to be the preferred scenario I'm looking out for. But again, we have to let the intraday charts be our guide. I'm not going to, we'll have to see how things look when we get there. All right, so that's the daily chart, and then finally, just take a look at the more significant weekly chart. Again, this is what tells me, at least at this point in time, this bull has not taken its last breath. These are those long-term trend lines I talk about. We had a primary uptrend line off the 2009 lows. Again, this is just a recap for those of you who are new to my analysis. We had a breakdown back here in 2015. We also had a period of sideways consolidation that lasted for nearly 2 years from this point, and that helped to it was a period of consolidation to help to work off some overbought conditions. It's also what is known as a deer market. A deer market is a sideways trending market, whereas a bull market is a rising market. Bear market's a falling market. This was nearly, 2 years of sideways trading action, and then we broke out above there, broke out and back tested, and that was bullish, and that really was the fuel we needed that consolidation period to have this advance. Now, uh, this is the trend line that I'm watching here. This is the what I refer to as the primary uptrend line right now in the stock market, in the broad market, and that uptrend line is off the 2015 lows. We'll do this in reverse order here. We're on the weekly charts, so I'll just stick with that and recap here. There's QQQ, same story. I had a couple trend lines here, but this yellow one was a primary trend line. And if you really zoom in, you can see it broke down here in 2015, followed by a sharp drop off that divergent high. It was about a 26% correction in QQQ. So by many metrics, it was a bear market. Even that second correction was a 19% drop. We had the initial shot across the bow, then that divergent high. And by the way, guys, this meshes with what I'm talking about here, and it looks very similar and of course, on a much bigger scale. This was a larger uptrend line off the 2009 lows. But if you take everything else away and just look at what I'll highlight here, we had that first very sharp, very fast correction. You get those drops when most of the shorts have given up. There's not a lot of short interest. Therefore, you don't have the shorts to step in and cover during a drop. You get those mini type crashes, quick meltdown scenarios, flash crashes, whatever you want to call them. That's what happened back then. That was marked by a divergent high, and it was followed by, as you can see here, after the initial sharp drop of about 26% in QQQ, we recovered, went on to make a marginal new high, just as what my current forecast has, put in divergence, I call that divergent high number 2, and there was another drop. Now that drop wasn't as big as the drop here, and the next one may or may not be. Or my scenario may not even play out, but I just wanted to mention that jives meshes well with what I'm looking at again on the daily time frame, looking for a divergent high, another pop up, and then a move down. And ultimately, when these trend lines go and some of the key moving averages, I'm talking about this primary trend line here and the one I just covered on SPY, that is when it's a pretty good chance that we can say that a new bear market is underway and that this bull, or at least this leg in this super bull market for the time being, is over. Okay, but again, one step at a time. We'll cross that bridge when we get there. There it is on QQQ, daily chart, same scenario. Q is closer to making new highs. What I imagine will happen is this rate of ascent here will probably slow down some sooner or later, especially as we come in to test these new highs. So I told you guys I'd give you my near and long-term outlook. So let me get back to the near term. This is the daily chart again, scenario I'm looking for now, and we'll see. Again, I'm just cannot continue to reiterate you have to be flexible in trading, and I view swing trading and investing, I view it like weather forecasting. If I look out the window right now and I see dark storm clouds brewing and I can hear thunder in the distance, I can tell you with a pretty good chance, as the weatherman can, looking at his radar, that it's the chance of rain today is high, 80% or more. However, when you go out to next week, you go out a month from now, 6 months from now, um, it becomes a lot less clear. Then at that point, you can only look at seasonality patterns, things like that. So the stock market's the same way. So we have to just continually adjust our analysis, and I do so by formulating the big picture there, but then really going off the intraday charts here, the daily charts, the 60-minute chart that we're looking at. These these are where my trades are placed. This is where the timing occurs. These are the charts that tell me when to get long, when to get short, when to close out positions. So here's QQQ on the 60-minute chart, and you can see a lot closer to the previous highs. So near term, again, you'll probably start to see some sellers step in as we approach those highs. Sometimes, and let me just say this, we don't have to make a marginal new high. Sometimes these kickback rallies fall shy of the previous highs. And there's a little bit of a disparity. When we looked at the 60-minute chart a minute ago on the SPY, there's a lot considerable more upside to match these previous highs up here, right here. QQQ, what I drew here is there's a little resistance level there. This was sort of a mini head and shoulders type pattern. You can see here, head and shoulders topping pattern with the left shoulder there, the head, and the right shoulder there. This was our neckline, and that's where it broke down. So really about the top of those shoulders, that's going to be the next resistance after this resistance zone. We closed out on Friday, and once again, we're indicated a gap higher, about 169 right now. This is where we're poised to open, somewhere around here. Um, and then we're going to test those highs. So I expect, even though we did just break out of a consolidation range, um, as we get up around maybe just above or just below those new highs, expect maybe a little more consolidation. So that's what I'm thinking right now. That's what I'm looking at. And again, there's QQQ not far from challenging those highs, and here's SPY. SPY, as you can see, has quite a bit more work to do. We're currently poised to, as I mentioned earlier, gap slightly above this previous resistance level, which, by the way, my targets, as you guys know, if you don't know, I usually set, or I almost always set those just below the actual resistance level. So in this case, T2, when it was hit back here, was 275.30, and we hit a high of, where was it? If I can get the crosshairs right on there, we hit a high of 275.32 that day. So just by 2 pennies. And the reason I set those targets below, the actual resistance level was at 275.39. So this is very common. Sellers stepped in. Remember, we hit a high of 275.32. The actual resistance level was at 275.39. That is why I tend to set my price targets on longs slightly above, because sometimes when a lot of eyes are watching a level, the sellers will step in early, and this helps to avoid missing a fill. I'm not going to get greedy and try to eke out the last few pennies on a trade and then risk a sudden reversal like that and then a give back on profits. So we had a nice exit there. And more importantly, I wanted to point out that's not our resistance level. We need to really clear 275.39. We'll call it 275.40. And right now we're trading at 275.91 in pre-market. So let's wrap. Okay, yeah, we will. We'll wrap it up here. I did want to cover, do another video or maybe some static charts on sector analysis. I'll go over some of my favorite sectors and the outlook for the 11 sectors in the S&P 500, along with anything else that stands out. This has been Randy Finney with Right Side of the Chart. I hope you enjoyed it.